Another day, another dollar. You might not think money is something to sing and dance about, but don't worry, that's why I'm here. I'm Julie Beckham, the financial educator at Rockland Trust, and this is Behind the Curtain, Money Made Simple, the podcast that takes the mystery out of money and puts the spotlight on your financial life. If you've ever felt behind, confused, or just totally overwhelmed when it comes to your finances, you are not alone. In fact, you're part of a cast of thousands. So take your seat and silence your phones as we pull back the curtain on personal finance. Hello, everyone, and welcome to Behind the Curtain, Money Made Simple. We're back. The spring season is flourishing. We had a nice little break. I hope you stayed engaged with Behind the Curtain on social media. Just caught up with some of our podcasts during the fall season, but we're just not wasting any time. We're springing into action with tax season, and I have my colleague, Rita Yeung here, manager of tax services at Rockland Trust, and I'm so excited to talk all things taxes. Hi, Rita. Thanks for coming on today.
Hi, Julie. Thanks for having me. Hello, everyone.
Yes, it is. You must be a very popular person this time of the year. It's like having a plumber around when like a faucet leaks. Having someone who's in accounting services during tax season is a very valuable position. So tell me a little bit about what made you get into this role.
Yeah, so interestingly, when I did my bachelor degree, I did a concentration in both finance and accounting. But at the end, I chose the latter. Just because the concepts just made more logical sense to me with the debits and credits. I also like to do puzzles. So to me, accounting just seems like a big puzzle that I like to solve. So in that sense, I do love solving problems. So that what's intrigued me into getting this field.
I love that, when you're able to kind of incorporate a game into your career choice. If you put a puzzle in front of me, I would just look at it and walk away. So I completely admire the fact that is intriguing to you and you just like to solve those problems. So, this is good because we have lots of problems to solve. First problem I want to solve is this, April 15th? What is the date this year that it's going to be?
Yeah, so the tax deadline, the original tax deadlines typically is on April 15. So it is important because that's the date that most of our taxpayers need to file their federal tax return and pay any taxes owed by. Paying your taxes on time can really help avoid any late penalties, interest, and etc. If you find that you do need more time, though, you can file an extension, but also you do need to file it by that date.
Gotcha. Okay, because I just wanted to come out the gates talking through the eyes of a procrastinator who is inching up on this deadline. And that is good to know that you can file an extension, but you do need to file it in time. But regarding any fees that you might pay or taxes you might owe, will that extension sometimes harm you in that way?
Well, for the extension itself, it's the extension to file your return. It doesn't extend the payment due date. So you do still need to, unfortunately, figure out how much estimated figure, how much you will owe for your taxes. You may at the end pay in a little bit too much, or you may be paying a little bit under, but you should at least be close enough that if there is any gap in between, that it shouldn't be too big of a difference when you do file your returns.
Okay, great. Now, there's been a lot of talk. I mean, we will get into some of the changes that have happened this year, but some of the standardized things that, happen year to year, and we're all kind of still getting used to the whole idea of the standard deduction versus itemizing. Can you give us a little bit of a history of that, how this has changed, and what you see as kind of best practices out there?
Yeah, so standard deduction versus itemized deduction, both deductions go against your gross income, what we call adjusted gross incomes, before it reaches to your taxable income. Now, standard deduction is a fixed amount that the IRS sets every year, and it's based on your filing status, etc. It is a simple amount. You don't need to have any documentations or receipts to take this deduction. Itemized deduction, on the other hand, is an aggregate of the actual eligible expense that you paid during the year. So some of these include your mortgage interest, the state and local income tax, real estate tax, charitable donations, medical expenses that reaches above a certain percentage of your income. So when you tally up all these expenses, it can end up being larger than the standard deduction, and it would be more beneficial for you to take this larger deductible expense. However, I have to caveat by taking this itemized deduction, you do need to keep up with the record keeping and have a detailed understanding of what is eligible for the tax deduction and what is not.
Right. It is a much more detailed puzzle, let's say, right, to itemize your deductions. But in some career choices, that can be the best way to go. So, for example, I used to be a working actor and I had several different jobs. And I didn't have taxes taken out of many of these contract jobs. And so I did itemize throughout the year and had to keep these details receipts. So as we inched up to mid-April, like the panic in my body to, compile all those receipts and make sure that I had them accurately and I kept account of everything was really intense. Whereas now that the standardized deduction has, it increased a few years ago, or maybe several years ago now, correct?
Yeah, so the standard deduction used to be much smaller, and with the tax changes in the recent years, it has definitely increased quite a bit. So a lot of my clients I've seen, they are more inclined to take the standard deduction. They don't want to deal with the record keeping and whatnot. And it does also make sense for them to take the standard deduction at the end.
Yes, especially if you do have one primary job,
right,
where, you're just where the taxes are taken out in your weekly, biweekly, monthly pay. Yeah. That is, the standard deduction. Okay. So it's a little bit more work when, admittedly, I've done it. So I think it's a lot more work. To itemize, having been there, done that. Yeah. But given whatever your particular career or income is, it could be really worth it. So I did a lot of gig, what we call like side hustles or gig work several years ago. And so that what prompted me to itemize. There's so many side hustles and gig work now, but also it's a little bit different because sometimes that's on top of a regular, typical 40-hour-a-week job. So what are some advice, when you're getting paid through Venmo, you're, doing these side hustles, you're selling things online. What's some advice for those folks out there that might be doing that so that they don't land in some hot water?
Yeah, so most gig workers are considered to be independent contractors, what we call them, and not employees of the company. So they won't be the ones that get the W-2 that we typically a payroll person gets from their company. So in that case, because they are not part of the W-2, there's no tax withholdings. So these gig workers are responsible for paying their taxes on their own and tracking the income expenses. Now, income is taxable even if you don't get a 1099, so you do have to have a good record of keeping up with what you receive for your gig work. But some of the common forms that a gig worker may receive is the 1099 NEC, which will report your independent contractor compensation, and also a 1099K, which reports payments that you received through the apps and other platforms. So that would be the Venmo, etc.
Let's just say you started your own little side hustle and there was some upfront cost to that. And so you would report the income in, what you said, the 1099K. You would report that income, but is there also a place to report the expenses of building that business or that side hustle?
Yeah.
And does that deduct from whatever income you have to pay taxes on?
So the 1099K and the 1099 NEC is to just report your income. But on the business expense side, yes, there are expenses that you can deduct for your business that you may not normally get to deduct on your own personal income tax. So stuff like your mileage or your vehicle expenses, the business-related portion of your phone, internet, supplies, software equipment, and home office if you're eligible as well. That portion of the expenses related to your home office that can be deductible as well. Just keep in mind, again, you are responsible for keeping records of these expenses, so you do have to have a good record of them. Save your receipts and your mileage log, and there are plenty of bookkeeping software out there that can help you with having a good record.
Recently, I interviewed someone who was, is a professional in AI, Christopher Penn, and he was talking about when it comes to health, the law, and your money, make sure that you speak to a human. AI is great. We do a lot of searches. It's very helpful in a lot of ways. But can you speak to that when your taxes or your income or your just overall financial picture is a little bit complicated, the benefits of seeking a professional accountant?
Whether or not to seek a professional, it really depends on your income situation. When you take a look at it, it is like it's not considered what we call simple anymore, not a W-2. You have a self-employed income, a freelance side business that's growing and getting more complicated, or there could be deductions that you're not aware of how to take or what you're eligible for, things like that. Then I think in those cases you would want to seek out for a professional to help you.
And in your experience, do people feel, I don't know, like ashamed or like wary talking to a professional? I feel like sometimes we feel like we should know all the answers. And then, you kind of talk yourself out of asking the question of the professional because you feel like you should be able to figure it out yourself. What kind of advice could you give to someone who's in that position where they're just kind of fighting with themselves over whether you know what I'm talking about, though, right? Like, I think we do that in a lot of situations. Yeah.
Yeah. I mean, I have this situation even with my own friends, to be honest. We think like, oh, at this day and age, we have access to all these AI or tools and going online and finding the answers. It's simple, right? But the reality is that our tax law landscape is just ever changing and it's never the same. And, depending on the next administration, or we could have tax bills every year that can change your situation. So, if you find that you're kind of guessing, like I'm not sure if I'm doing it right, or if you're struggling to see, like, okay, well, what can I do more to save, or think about planning for the futures and things like that. I think that's a good time to think about maybe I should ask for help and seek a consultant or a tax accountant and so forth.
Yeah, that's great advice. And I'm sure as a professional accountant, you must see your friends like their thought bubbles in their head, like wanting to ask, not wanting to ask. But it's law. It's the law of money. And so laws change and are, and so do tax codes. And I am friends with accountants as well. And having to keep up with all of those tax codes is a chore. It's part of the job, but it is constantly changing. So speaking of that, when we're filing for 2025, what are the new things that we need to have on our radar?
Yeah, so the new tax OBB bill, the One Big Beautiful Bill, there is a lot of tax-related changes that is packed into this bill. So for this coming tax season, some of the things you want to think about is, for example, the senior deduction that was added into this bill. So our seniors are now eligible for an additional deduction up to the $6,000. The state and local income tax that's part of the itemized deduction is now capped at $40,000. It used to be $10,000, but they have increased it to the $40,000. The overtime pay and the tip income, there's also a deduction related to that. For anyone who has a new U.S. assembled car, they now can deduct their car loan interest up to $10,000. The child tax credits and dependent care credits have also gone up from the previous amounts. For anyone that is looking into these new changes, you do have to also pay attention that some of these changes are temporary. They do expire in a certain number of years, while the others, they are what we call permanent changes. Now, we caveat the permanent part because in the future, an other administration could come in and make changes to these as well. So just make a note of these changes that may apply to you.
Okay, so does this, from your professional experience, does this year warrant more attention than maybe previous years?
Yeah, we're seeing a lot more changes this year with the new tax bill than the other prior years, where it's only maybe slight changes and whatnot. This is a lot more changes that may impact your tax filing. So yes.
Okay. So that's really, this might be the year
Yes.
to connect with a professional if you've been waiting, because if you fall into any of those areas, and I'll just repeat some of those, if you bought, did you say a U.S. car?
Yeah, so the car loan interest deduction is only for a new U.S. assembled vehicle.
Okay. So if you bought a new Toyota, that does not count.
Yeah, most likely not. Again, it goes into the details of where it's assembled and
Yeah, because it could be assembled in the U.S.
Yeah.
So interesting. Okay.
Yeah.
So,
And that's why we say, in situations like that, you may want to seek professional because,
right.
if you look at just the title, like, oh, you get a car loan interest deduction, but what is
Right.
eligible? You have to kind of take a little deep dive into that. Yeah.
Mm-hmm. And there are many foreign produced cars or, names that are assembled in the U.S. So that's tricky. Okay. I feel like there's a bunch of asterisks there. And you mentioned if you're a senior, that's a new tax law. So check that out if you're a senior. The child deduction, you mentioned that as well.
Yeah, there's the child tax credit and the dependent care credit. So that had already been in place before the tax bill came along, but they have increased the amount. So people who are eligible for these credits, they have a slight bump in the tax credits. I say the big one is probably the state and local income tax deduction. That's part of your itemized. I think a lot of people have been waiting for this to go up from the $10,000, especially our clients who are taxpayers who are in states that pay high real estate taxes. So $10,000 really doesn't cover too much, unfortunately.
Right. So that for our area is a more expensive place to live. Our property values are very high, which means our taxes can be higher in coastal areas, all those kind of things.
Right.
So that's one to look out for as well.
Yeah.
Well, I think listeners really should, dive deep, even though there's only a few more weeks left to do your taxes. If you haven't checked out some of these new tax codes, do some research, contact a professional. Another question, if you do your taxes this year and you realize you're getting this big refund, which basically means you're kind of loaning money to the government interest-free and getting it back later. You're not, receiving that money and you're on your biweekly, monthly paycheck. What are some things that you can do? What is the language to take to HR or your payroll consultant with your job to get more money in your paycheck instead of waiting for that refund?
Yeah, I mean, if you're getting a big tax refund, I think most people like to get a big tax refund, but it could also mean that you are paying too much to the government and they're holding on to your money and earning interest on it. So to avoid that getting a big overpayment during the year, you may want to try reviewing your W-4 with your employer first. W-4 is the withholding form that you file with your employer. So on the form, you may want to reduce the extra withholding that you may have, adjust any dependents or credits that they have on there as well. And also, if you have itemized deductions, you would want to reflect that on the form as well, so you're not withholding too much. For anyone who does pay estimated taxes instead, you may want to run through your tax projection closer to year end, which is typically what most CPAs do for our clients who do pay in a lot of estimates, and then you will have a better idea of where your income expenses fall to see if you should adjust your last quarter of your estimate payment so you're not paying in too much.
It feels like tax season really just puts this spotlight on your finances in general,
Yes.
Because some of the things you're talking about, just your budget and your projections and just everything seems to just kind of hone in on this is your financial life, which I think is why some people want to run and hide during this season because, they're, just getting by. So many people are living paycheck to paycheck. Expenses are very high. And in this time of the year kind of puts a spotlight on, there's no shame in saying lack of planning, but there is sometimes a lack of planning in our financial life because we're running the whole time to keep up. So instead of focusing on that lack of planning, it also kind of flip the script a little bit. This could be an opportunity to kind of spring into action and to project for the rest of 2026 what your learnings were from this tax season and how you can move forward with some strategies that will put you in a better position next year. Is there anything that you kind of see in your work that is tangible advice that you can give someone at this stage instead of shaming themselves and getting all mad that they owe money or they did it wrong? What can they do to kind of do better next time?
Yeah, I mean, I think this comes up a lot more often than not. I always advise our clients to not think about their tax situation until the deadline. And I think most of us do that, unfortunately. But for tax planning, it takes time over the year to think about what you had received, what you have been paying, what are you paying taxes on, what can you adjust to get to where you want to be. So it is a year-round planning tool instead of just trying to get it done by the tax deadline like a compliance exercise. Understand that people who pay the least amount of tax legally, they're not just luckier, they are more intentional with their tax planning.
Gotcha. Okay. Yeah. That takes a plan. It's a strategy. So next year we'll have this talk in the fall so that people can get in line before this, they still have an opportunity. But speaking of an opportunity for the 2025 tax year, what are some things that we can do to either boost our retirement or help our tax situation in 2025 by this April 15th deadline?
So the retirement contribution, you can still make that before the tax filing deadline for your prior year. That would apply to your prior calendar year. So for your 2025 tax year, you're still eligible to make the retirement contribution by the April 15th deadline. There is deductible portion of it depending on your income, etc., that will reduce your federal taxable income and then lower the taxes that you owe. So that will grow tax deferred until the time that you make a withdrawal from that account. Now, that deductibility does get phased out based on your income and also depends if you or your spouse have a workplace retirement plan. So you want to make sure that if you are taking a deduction, that you are eligible for it. So you do have until April to also still make these changes that would apply to your prior year.
Okay, awesome. Well, that's good. There's sometimes once it hits that deadline, yes, it is late for 2025 taxes if you don't file that extension. But, sometimes there are some last minute things that you can do to, mitigate your what you owe, or just even it out. Rita, this is so, great to be able to elevate your work right now during this crunch time for many of us. For those who've already filed, yay, you're awesome. This is so great. But what if you filed? Okay, so let's just say I'm a go-getter and I filed and I think, I'm just going to listen to this podcast because I already know things. And then I hear you and I didn't realize these new tax codes and I bought a car and I'm paying interest on a car that was assembled in the US. What can I do? Once I'm filed, am I done?
It's not done. If you find that you do need to make a correction to your return, you can also always file an amendment with the IRS and with your state authorities. So you would want to take a look and see, what did I need to make a correction on? Do I lower my taxes? Do I increase my tax? Obviously, if you miss an income that you should have reported, you still need to correct it and pay the tax related to it. But if you find that you should have taken a credit or deduction that you didn't take on your original return, you can file the amendment and then take that refund on the extra payment that you made on the original return.
Okay, great. All right. So, I think sometimes, I'm learning that fear hates facts, right? So we get really nervous about things we don't know. But if we bolster ourselves with some facts, it takes away a little bit of the fear. And, you can mess up and you can fix it. You can ask for an extension. You can speak to a professional. There are so many things that we can do, even if we're a bit nervous, a bit delayed, a bit late to the game, and maybe made some mistakes that we want to course correct for next year. So, Thank you, Rita, for this. This is so, so important. And I do want to do some behind the curtain, Money Made Simple rapid fire questions with you before we leave. Is that all right with you?
Yeah, that works.
Okay, great. So, Rita, what is your favorite word?
I would say resilient.
Oh, I like it. What is your least favorite word?
Unmotivated.
What is your theme song? Like if you were a baseball player, your walk-up song?
I have to admit, sometimes when I'm in a bad mood or I just need a little boost to my mood, I do listen to Unwritten by Natasha Bedingfield.
I love that song.
Yeah.
That's a great one.
It really does put me in a better mood.
That's so good. It's so important to have that. What is your most used emoji?
I think it would be the emoji with the crying laughter, with the 2 tears. That's typically, yes.
Good one. What gets you motivated to do the work you do?
It's definitely my clients, number one. Sometimes when we do the work we do, we sometimes forget how much we help our clients, and we don't really know it until they slip you a little note if you're the stuff that they sent us. Like, we really thank you for the work that you do. And yeah, I think to get that gratification of being able to help our clients, because they would need our help, like I said, to understand all these tax laws and changes. That's really something that I put myself number one.
Yeah, that's awesome. It's more of a people business than people think it is,
Yes,
right?
Absolutely.
Yeah, that's amazing. What keeps you from doing the work you do?
To be honest, it's the crunch time, the short period of time we have to do to get everything done right and to get it done on time before the April deadline. We do have a very short window, and thus it gets stressful and it gets tiring. But again, I think the other side of it does keep me going. So
yeah, the busy season must be really hard. So think about that. When you're stressed out about your own financial life, think about the accountants in your life who are, doing it all for everybody. That's true. What's some money advice that you would like to erase from your memory?
I think everyone had gone through a time when they don't think about their financial literacy. They're not thinking about, save, and how do I plan for the future. If I had gone back in time, I would definitely listen to more of these podcasts. And nowadays, the YouTubers out there that put out these planning advice and really pay attention to that. So when we're younger, we tend not to think about these things. So I do want to erase that part of it and really put more attention to what's in the future for me.
And conversely, what's the best advice you've ever received about money?
That a little bit will get you to the bigger picture in the future. No matter how big or small that you save today, it really does make an impact in the future.
Yes, it does. All right, awesome. And lastly, can you give our listeners a challenge? What is something that they could do today that could change their financial lives?
Yeah, I think we've talked about think about tax not just at the tax deadline time. Think about it throughout the year. So my challenge would be to maybe spend half an hour or an hour each month as you do your budgets. Think about your income, expenses, what are you paying taxes on? And I think that will get you to the right foot to think about what tax planning I need to do for myself instead of trying to react to it comes end of the year.
Yes. Yeah. It's just like you said, like saving little bits at a time, taking a half hour, an hour every month, little bits at a time, can make your 2026 look different than your 2025 tax return if that's where you are right now. I love that, Rita. Thank you so much for taking your time. Again, this is Rita Yeung from Rockland Trust, here just to help get through this tax season. Good luck to you. And thank you so much for being on today.
Thank you, Julie. Thanks, everyone.
Thanks for tuning in to Behind the Curtain, Money Made Simple. If you liked what you heard, if you learned something, subscribe, leave a review, and tell a friend, because good financial education deserves a standing ovation. And remember, you don't have to know all the steps before you take the stage. You just need the courage to show up, ask questions, and maybe, just maybe, sing a little bit along the way. I'm Julie Beckham, and Behind the Curtain Money Made Simple is brought to you by Rockland Trust, member FDIC, the bank where each relationship matters because we want you to have a healthy relationship with money at any age.